But on that, NDTV Profits Managing Editor Tamanna Inamdar also joins us on this broadcast. Tamanna, first and foremost, which Indian sectors are likely to benefit from this cut and which Indian industries might actually lose out on this deal?
I think it's a win-win, Arjun. This is the deal that the Indian markets, industry, corporates have been waiting for the better half of the last 6 months. Right. And across the board, there's going to be a sentimental positive. As far as the sectors are concerned, think about export-oriented, export-facing sectors. So textiles, leather, gems and jewellery, some food products like rice, etc., especially basmati. This was what could have been hit and was getting hit with an effective 50% tariff. Now, these get an immediate boost, but it's the here and now. And I would like to draw your attention to what Indian markets are going to look like this morning. The implied open for the Nifty is looking at maybe a 700-point jump up. So think about all of the pain that the markets have been seeing in the last 2 or 3 months gets wiped out maybe this morning if the implied open pairs out how it is. You also have to look at it in relative basis, because while some sectors will benefit, what is India's effective tariff versus nations in the neighborhood? So Indonesia has a 19% tariff, Vietnam 20%, Bangladesh 20%, and importantly China 34% with the US. So India at 18% is sitting pretty right now. I mean, this is a deal that came maybe later than most would have hoped for, but it's definitely one which is a win-win on both sides.
Very important point you raised there about the markets, which was, in fact, my next question to you, Tamanna. Now, another important question that springs up here is what investors should be looking and rather watching once the deal details emerge. Of course, we're waiting for them to come out, but what are those one or multiple key points that investors should keep a specific focus on?
You know, frankly, the nitty-gritties and the detailing of the deal is not going to matter much to market sentiments. The way markets work is that they discount the news or they react to the news as soon as it comes in. So the inking of the deal and the actual of the deals may take some time. And unless there are some devil in those details, you're going to see the first reaction at 9:15 this morning and at 9 a.m. when the pre-open session begins. So you're going to have a huge gap up opening. That is very, very likely, because this was the last bit that wasn't working out from Indians' perspective. Foreign investors have been selling from Indian markets consistently over the last 2 or 3 months. And now they have a reason to come back to the China plus one kind of a model in terms of investments. The geopolitical isolationism, which was a concern as far as India as a market goes, is now out of the question, right? We have this great deal with the European Union, we have a deal with America, and there is enough reason for foreign investors to come back. As far as investors are concerned, they have to now maybe look at which companies and which stocks are rising the most and look at maybe booking out profits after a few days.
Yeah. Well, I'm also joined by NDTV Profits Executive Editor Nisha Poddar. Now, Nisha, you know, we've seen US demands on sectors like data, agriculture, even IPR for that matter. Now, do these demands, as we've seen from Trump's status there, including that $500 billion purported investment in energy, do these demands complicate or could they complicate the next phase of this deal?
So in this, it was clearly visible that oil politics and oil diplomacy of the US was one of the prime factors which really pushed US to actually sign a deal quickly with India in this particular respect. And that was also one of the most important standoff points between India as well as the US, where India earlier came out as a much stronger nation looking out for the interests of its own people and buying Russian oil. So that was one of the biggest constraints. And therefore, with India really agreeing to stop using Russian oil and also recalibrate its purchases and go more for US oil as well as Venezuelan oil and assets, which is under US control, that really turned the tide in favor of this particular transaction happening. Also remember that with European Union, we have done mother of all trades. And that was also one of the tipping points, because somewhere, as jokingly said, that US had a FOMO when it comes to the India trade deal. So the standoff, in fact, two important aspects that came out from the US narrative and the comments that have been made by the US ambassador. One was that Sergio Gore, when he was in India, he made a very famously known comment that we are good friends with India. And that really turned the tide on the market, and it was quite visible at that time that this uncertainty is expected to go. Yesterday, after clarifying the tariff situation, that it is from 50 to 18, Sergio Gore also made a mention that with EU, India took 19 years to sign a deal, while with the US, it is still much shorter. Remember, it is from April last year that the overhang of uncertainty of US tariff has been hanging on India's economy as well as manufacturers and exporters. And this comes in as a very, very big clarity. And the overhang of this uncertainty going in is going to be one of the biggest boosters for the Indian market and also economy at large, where we were struggling with the biggest market for India, that is the US market. And now with 18%, we are looking like we are one of the most trusted allies of US with this kind of lower rates, which is very competitive compared to the rest of the world.
Well, a very important point you raised there, Nisha. I'll take it across to Tamanna there. Now, Tamanna, could this, speed up the China plus one shift to India?
No, definitely. From the perspective of global foreign investors, what was happening so far is that every global investment house has an emerging market fund. And India's share in that fund was beginning to shrink for a couple of reasons. Also, remember, this is going to have a positive impact on the rupee. Watch out for how the rupee opens this morning. As the rupee was depreciating, any investments in India were becoming less beneficial, because when you pull them out, you're actually losing currency and in that exchange rate. So you have more and more reason for foreign investors to come back. And while we have a very strong cohort of domestic investors, all of us pay our SIPs every month, that is what has saved the Indian markets thus far. With the foreign investors coming back as well, which now they have enough reason to, and I'm talking about basically investment and hot money right now, this is going to be great for markets. On the China plus one factor, even from a point of view of large buyers, I'm not talking about stock markets now, I'm talking about large buyers, makes sense to buy from India because you have a better rate than China, which is around 30%. You're at 18%. You're a more trusted partner geopolitically as well. And now inking of this deal has made it clear that India-US trade relations and the relationship between the two nations, which has been a long-standing bench strength, is now only improving. So the China plus one factor also becomes very important, and the outflow of money, which was going from emerging market buckets out of India and maybe towards China, could now start coming back.
Right. Nisha, I'd come to you now, playing the devil's advocate, as we always do. Now, in the absence of any long-term treaty, how vulnerable is this current deal? As we've seen Trump's flip-flops over this year and in his first term as well. So how vulnerable exactly is this deal in the absence of any long-term treaty?
That's right. But any of these US tariff deals will need now. It is just the deal that is signed, and the headline figures have really come out. Like in the case of EU, when we had checked with the experts, there is a whole mechanism of every word, the language that is used in the tariff negotiations, and every data that gets negotiated and also goes through legal scrubbing, which in case of the European Union treaty and the trade deal will take 6 months. So it should take a few months for the legal scrubbing and for clarity on the kind of wording and language that comes out. But if you ask me that will it be vulnerable with the flip-flop that Trump has shown, unless something very big really takes place globally, chances are minimum because for India, US is a large market, the largest economy in the world, for the fastest growing economy in the world is important. But equally important is for US the Indian market, because we are a growth market where many MNCs from US are present here. They have been doing business here, and when I have been speaking to those multinational companies based out of US who have a huge presence in India and see their growth potential, they remember, have been feared, they have been scared about losing India business because of the way the India-US tensions were escalating when it came to the tariff war. And so the MNCs, there is a huge market, there are huge lobbyists from the corporate world in the US who also wanted and pushed the US government to really come to a conclusion with India, because they cannot afford to lose the Indian market for their business potential. So it's a win-win from both the sides. It is not any one party which has made any desperate attempt. India actually stood its ground because it knows how important the Indian economy is for the US. So it's a win-win for both. Chances of this derailing in future could be minimal, but yes, flip-flop taken, because unpredictable nature of Trump is one thing to be watched out for as a risk factor.
Well, there you have it, the bottom line, viewers. It's a win-win, or so it seems. And of course, we're all waiting for the details which are expected to come out sooner than later. Nisha and Tamanna from NDTV Profit getting us the latest on this story.